Good morning, everyone, and welcome to October. This is the first day of trading in October as we enter the last quarter of the year, and we will be looking at quite a number of developments that have happened in the markets. In addition to these, we'll be looking at the key market prices, and once we get through this, everyone will know where to look for opportunities. So this is the daily market snapshot series. Happens every day at 11 a.m. Monday to Friday. So hopefully you get to enjoy and gather a lot of insights in the markets. So my name is Rufas Kamau, markets analyst at FX Pesa. So hello, Butin. This is Chep Koril, Shamgay. Hello, George. Good morning. Happy new month, Mana. Thank you guys for joining, and hopefully we get to learn something today. So first things first, we'll be starting with the economic calendar to see the key events that you're expecting for the week. And once we are through with the economic calendar, we will look at a couple of more stories that are expected for the week before we look at the key market prices that could be instrumental in this week's trading. So clearly, we can see we had a data point coming in on Sunday, the 1st of October, and this was a Chinese Caixin manufacturing PMI, as well as a Caixin services PMI. So both data missed expectations, with manufacturing coming in at 50.6 versus a previous reading of 51.0 and an expectation of 51.1. So this is still within the expansionary territory. It's above 50.0. So while it missed expectations, it's still reasonably good since it's above 50.0. So same thing at services, slowed down from 51.8 down to 50.2, but still within expansion. So going ahead for the rest of the day, we'll be looking at one, the Bank of Japan meeting minutes. This has already been released, was due at 2:50 a.m. Tankan manufacturing index came in better than expected at 9 compared to the previous reading of 5 and an expectation of 6 in Japan. The non-manufacturing index also improved to 27 compared to 24 and 23 being the forecast in the previous reading. We also had the MI inflation gauge in Australia, which came in at 0.0%, compared to the previous reading of 0.2%, all low impact news. So we have a bank holiday in China, and now we also had a couple of data releases that were quite surprisingly good. And this is basically the manufacturing PMI for Japan, which came in 48.5. Nationwide housing price index was unmoved at 0.0% in the previous month. Retail sales in Switzerland came in at negative 1.8% as expected. And then we got a flurry of manufacturing PMI data that was quite positive. So in Spain, an improvement for 7.7, still below 50.0. Manufacturing PMI for Switzerland, 44.9. Italian manufacturing PMI 46.8, and of course, French manufacturing PMI at 44.2. So then we had German final manufacturing PMI. This is still significantly low, but an improvement to 39.6. Sorry, not an improvement, but getting worse compared to 39.8 expected and 39.8 previous. So final manufacturing PMI for the Eurozone was 43.4 as expected, same as the previous reading, whereas Italian monthly unemployment rate moved to 77.3%, which was lower than the expectation and of course lower than the previous reading, indicating that the job market conditions in Italy are improving. So going forward for the rest of the day, apologies for that, we have final manufacturing PMI for the UK, unemployment rate for the Eurozone, a bank holiday in Canada, manufacturing PMI for Canada, and then final manufacturing PMI for the US, as well as ISM manufacturing PMI for the US, ISM manufacturing prices in the US, and construction spending. So as we approach the end of the day, we'll be getting a flurry of speeches from various central bankers. One of them is Monetary Policy Committee member Man. We will be speaking in the UK. Then we'll have a speech from US Federal Reserve Bank Chair, that is Jerome Powell, at 6 p.m. And of course, the FOMC member Hacker and FOMC member Barr will be speaking at 8 p.m. So clearly, in this case, I think the most important news for the day will be the speech by Fed Chair Jerome Powell. He's set to speak at 6 p.m. And this will be a roundtable discussion with workers, small business owners, and community leaders in New York. Audience questions will be expected. So besides the speech by the Fed Chair Powell, it's also important to notice that at 5 p.m. we could be getting some good volatility coming in from USD pairs as we look at the ISM manufacturing PMI, as well as ISM manufacturing prices, together with construction spending month over month. So all the three data points will be released at the same time at 5 p.m. So looking forward to Tuesday, there will still be a bank holiday in China. There will be an interest rate decision by the Reserve Bank of Australia, and this will be happening at 6:30 a.m. Then later on, we'll be getting inflation data from Switzerland at 9:30 a.m. JOLTS job openings at 5 p.m. Then we head over to Wednesday, where we get the interest rate decision by the Reserve Bank of New Zealand. And as you can see, both Asian banks are expected to hold interest rates steady. So in the previous reading, they decided to hold interest rates level at 5.5. So we expect this to be maintained. And of course, for the Reserve Bank of Australia, we expect these to be maintained at 4.10%. Then later on Wednesday, we'll be getting a speech from European Central Bank President Christine Lagarde. This will be at 11:15 a.m. And then we convene the OPEC JMMC meetings. So OPEC meetings tend to be closed-looped. They're not open to the media, but then the participants in those meetings tend to share information to journalists as well as on social media, and this could cause some volatility in oil prices. Then we look at the ADP non-farm employment change at 3:15 p.m. On Wednesday, before we look at ISM services PMI for the US at 5 p.m. Then another speech by ECB President Lagarde, and this will be at 7 p.m. So going into Thursday, we will be looking at the construction PMI for the UK, then unemployment claims for the US at 3:30 p.m. This will be coupled with a trade balance for both US and Canada. Then IVA Purchasing Managers Index for Canada at 5 p.m. before we head towards the end of the week, which will be on Friday. And in this case, this is the big day and the most important day of the week, where we expect the US non-farm payrolls as well as Canadian jobs data. So Canada will be expected to report employment change. The expectation is that the economy created 28,000 jobs in the month of September, and unemployment rate is expected to have increased to 5.6%. So as for average hourly earnings for the US, we expect this to increase from 0.2% the previous month to 0.3% in September. Non-farm employment change is expected to be 168K, which basically implies that the US private sector created 168,000 jobs in the month of September. So unemployment rate is expected to drop from 3.8% down to 3.7%. So remember that the Fed is being data dependent. So if we happen to see these numbers on the jobs data, that is the unemployment rate dropping to 3.7%, and the US economy creating 168K jobs or even higher, then it would mean a much tighter labor market, which would push the Fed to go for another rate hike on its next meeting, and this should be very bullish for the US dollar. So remember, we had 11 consecutive weeks where the dollar index has been running very strong momentum upwards, and this has created quite a number of overextended prices. So be on the lookout for potential reversals. But at the same time, we know that the dollar is still strong, and we could be seeing another week where the dollar continues strengthening against other currencies. So on another note, we have other stuff happening in the markets. These include the earnings reports and, of course, the recently averted government shutdown. So the US was about to shut down yesterday, but the Congress moved quite fast in order to pass a key number of financing bills that were basically delayed. And once they were passed towards the end of the week last week, then the government avoided a shutdown. So the September jobs report highlights the week of economic data after a last-minute deal saved the US from a US government from a government shutdown. So key updates on activity in the manufacturing and services sector of the economy, as well as the latest read on job openings, will highlight the economic calendar. So on the earnings front, results for Constellation brands, levies will highlight a light week of quarterly reports. So it's also important to note that the major stock market indices have had 2 consecutive down months in the third quarter. This is the quarter that ended last week. So the Nasdaq Composite Index fell 4.1% in the last 1 month, while the S&P 500 dropped 3.6%, and the Dow Jones Industrial Average fell 2.8%. So this is basically a chart of showing how they have performed over the last 1 month, and it's quite clear it has been a bearish month for the top US equity indices. So in the September press conference, Fed Chair Jerome Powell noted that supply and demand conditions continue to come into better balance. Signs of softening in the labor market have appeared over the last few months. Investors and Fed watchers will be looking for more signs of that as the labor market comes into focus on the week ahead. And of course, that is quite a number of data points that will be expected for the week. Kindly share calendar. Apologies for that. Thank you for reaching out. So let's continue. So I'll be finishing with this update, and then we'll go through the calendar quite quickly. So the September jobs report is expected to show 168,000 non-farm payroll jobs were added to the US economy last month, with unemployment rate dropping to 3.7%, according to data from Bloomberg. So in August, the US economy added 187,000 jobs, while the unemployment rate rose unexpectedly. So August report brought a significant increase to the labor force participation, which reached 62.8%, which was its highest level since February 2020. So as high interest rates continue to take a bite out of the labor market, we expect additional labor market cooling. Wells Fargo team of economists wrote in a note on Friday, we forecast that the US economy added 150K jobs in September, a step down from 187K in August. So looking at the data in the job market using these 2 graphs, it's very easy to understand what's currently happening. On one side, the unemployment rate has been consistently low. So the highest we have seen is 4% in January 2022. But since then, you can see that this has maintained significantly low levels, averaging somewhere around 3.5%. So in the last reading, 3.5%, and then in the last 1 month, it hiked higher to 3.8%. And in this case, we're expecting it to drop to 3.7%. So these are record lows in unemployment rates, which basically implies full employment in the US. And of course, we are looking at a very tight labor market, meaning that the demand for people to work in US companies is much higher than the number of people available to take those jobs. So total non-farm payrolls in thousands, as you can see, from Jan and February 2022, we had the biggest numbers here, with at 1 month getting 904,000 people being employed in 1 month. However, this has consistently been dropping over the past few months, and we had a high of 306,000 jobs in May this year, then a drop to a multi-year low of 105,000 jobs in June. But then the number of jobs being created have been on the rise. So in the last 3 months, you can see the trend changing, where on one side, this number increased to 157,000 jobs. And now in the last 1 month, we saw 187,000 jobs. So there's a high likelihood that this trend could continue, and we could be seeing a bigger number of employment creation, which would basically imply that the Fed has to go for further tightening. So another key thing that is not in the economic calendar is the auto sector, which will remain in center stage in the coming days as the United Auto Workers, which is a labor union, expanded its strike on Friday. So the UAW added more workers to the strike at Ford as well as General Motors, but spared Stellantis as negotiations improved over the past week. So with this strikes currently happening in the auto sector, basically means that these stocks could be quite volatile this week as investors expect these companies to be experiencing strong negative performance due to the strikes that are currently happening. So auto companies are also expected to report quarterly deliveries during the upcoming week. Tesla is expected to report deliveries of 456,000 cars, down from 466,000 cars a quarter ago. So these usually are very strong data points for Tesla. So investors who basically focus on Tesla, while they also focus on the earnings reports that are reported quarterly, a key important data point for traders in Tesla is the number of car deliveries that are reported every quarter. So in this case, once Tesla reports its deliveries, investors will be trying to weigh whether it's beating expectations as well as projections. So in this case, if Tesla reports deliveries of 456,000, this will be satisfactory. But then if it smashes the record, which is the previous reading of 466,000 cars, then this will be more bullish for Tesla. So the deliveries number will be very important. So where the situation could still evolve for suppliers so far, actually the impact of the strike seems much more modest than was initially expected. And this is coming from JP Morgan Automotive Equity Research analyst, Ryan Brinkman, who wrote a note in September 25. So going on, higher oil prices and yields on the 10-year treasury are hovering near 16-year highs have weighed on stocks over the past few weeks as the Fed's higher for longer stance sent stocks lower to end September. So we know that the Fed has been committing to holding interest rates higher for longer, and this is not very bullish for stocks. So that's why we have been seeing a bearish market over the last 1 month. And if this continues, especially after the Jerome Powell's speech this week, then it could lead to a much stronger dollar and much weaker equities. Oil, on the other hand, is enjoying a very strong bullish momentum, reaching 11-month highs, and we could be seeing oil prices cruise even higher this week. So also remember we have the OPEC meeting, and in the OPEC meeting, if they decide to continue manipulating prices to the upside by basically cutting oil supply, then this could lead to much higher prices. So JP Morgan's chief market strategist, Marco Kolanovich, notes that the tighter fiscal policy is just one of several headwinds as a slower than expected growth in China and the American consumer comes further under pressure. So medium term, we remain negative and find the risk reward in equities and credit spreads unattractive relative to fixed income alternative cash. Marco Kolanovich wrote in a note on clients on Wednesday. So this will likely remain the case as long as interest rates remain in deeply restrictive territory and the overhang of geopolitical risk persists. So technically, what's happening with equities? So after having the best first half of the year for the Nasdaq traders and investors, a lot of equity managers are considering locking in their profits. So if you established some good investment positions at the beginning of the year, and you're looking at a bumper holiday towards the end of the year, being up over 30%, which is way better than usual, investors are considering a very short route. So if, let's say you made some good returns at the beginning of the year, let's say you had some good positions in Tesla, best performing stock NVIDIA, and this gave you some good returns, then you are basically selling those stocks at a profit and then locking that money in a 3-month treasury, which is basically yielding a good return, which is around 5%. So as the year approaches the end, you are guaranteed to have your bumper returns. So that's basically what's happening as investors doubt that the equities market will continue to rally to the upside. So Besides that, I don't think there's any other highlight. So as for the calendar, I remember I was not sharing these. So for today, clearly these are low impact news. Only high impact news we'll be expecting for the day is ISM manufacturing PMI for the US, ISM manufacturing prices, and construction spending all at 5 p.m. And most importantly, a speech by Fed Chair Powell at exactly 6 p.m. As we head into tomorrow, early in the morning, there will be an interest rate decision by the Reserve Bank of Australia. We expect the RBA to hold interest rates level at 4.1%. CPI for Switzerland, which is expected at 0.0%. Then we start getting the job reports from the US. So remember, we normally get 4 job reports. The JOLTS job openings comes first. So this one will be on Tuesday. We expect this to be improving to 8.85 million. Then interest rate decision by Reserve Bank of New Zealand, 5.5%, is expected to be held at the same level. ECB President Lagarde speaking at 11:15 a.m. on Wednesday. OPEC meetings begin all day on Wednesday. ISM services, PMI for the US at 5 p.m. Then unemployment claims, which will be the second data point for the job market in the US this week. This will be happening on Thursday. And of course, as we approach the end of the week, the average hourly earnings, the non-farm employment change, as well as the unemployment rate in the US, all happening on Friday at exactly 3:30 p.m. So knowing that, now we can look at quite a number of charts and try to identify where we could squeeze in some opportunities. So first things first, last week was quite sideways for UK oil, or what you call Brent oil. So this being Friday, Thursday, Wednesday, Tuesday, and Monday, you can easily identify that the market opened around here and closed the week around here. So more of a sideways momentum with high volatility, with a big swing downwards, big swing upwards, then back to the opening price of the week. So it was more of a sideways momentum on oil prices. So previous week, 1, 2, 3, 4, 5, it was bearish momentum. So we can say 1, 2, 3, 4, 5. This is where the market opened and closed here. So market opens here for the week, trades higher and then lower, some good volatility, ends up here. Following week, continues moving down, moves back upwards, retests the previous high, goes back down and closes here. And now we are on the third week. So you can see the sequence here, a bearish week, a slightly sideways week, and now potentially an upwards trajectory on oil prices could be happening as we begin the new week and of course the new month and the new quarter. So there's a high likelihood we could be seeing some potential bullish momentum happening in oil prices, especially when we consider the current chart and what it's telling us. So this was a bearish momentum channel, or what looks like a wedge. So market was basically oscillating between the two trend lines. We managed to have a break last week. Market rallied all the way up, got towards the upper trend line here. So once we go to the upper trend line here, which is the resistance level, the market pulled back downwards to the breaking point, attempted to go further downwards, but clearly you can see the support coming in from this area, and there's a good chance we'll be seeing some further upside in oil prices moving from today. So high likelihood for upward trajectory on oil prices this week. So the other key thing to consider is the dollar index, which experienced a very strong bearish momentum on Thursday. Friday continued moving downwards, got to this resistance and now support. But then after it got to this area here, there was a strong reversal and the market erased all the losses for the day, closing the day on a high and of course, closing the week on a positive, meaning that the dollar index continues to rally higher weekly. So this week, we've started with quite a slow momentum. The market attempted to jump downwards, but now as we get into the London session, you can see that the dollar is experiencing some good strength. It has already erased all the losses it had on the last 1 or 2 hours. And this basically means that there's a high likelihood we will be seeing the dollar continue to rally higher. So a retest of the previous high of last week would be playing out today and tomorrow. And as a result of that, we could continue seeing the bearish momentum happen on pound USD. So I remember on Thursday last week mentioning that this strong rally in the pound only serves to create a potential trading opportunity for further short selling. So in this case, if you observe the trend line here, then you can easily identify that the market already got to the resistance area. Once it got here, pulled back downwards on Friday. Then today, we expect this momentum to continue. So the overall expectation is that the market continues pushing further downwards and perhaps it tests last week's low. So I expect the pound to be continuously bearish against the dollar. So USD finally did it. We were expecting this pullback, but the overall direction was upwards. So remember, from the daily chart, we have been expecting that the USD will eventually retest this high of 151.916. So last week, as the market was pulling back downwards on Thursday and then on Friday, it presented us with a nice entry opportunity, target higher prices. Currently, it has retested the previous high, and we are on the verge of another break. So last week, as we started the week, we were on the verge of another break. So this was what was happening. Friday, the previous week, prices faced resistance here. So this was Thursday and Friday. Then on Monday, the market opened by breaking above that resistance. So it traded higher for the 5 days. And now, as we enter into a new week, a similar setup occurs here, where the market found resistance here last week. It's attempting to break, and now we could be seeing another leg upwards, which would represent some further upside momentum on USD JPY, and we continue enjoying the bullish momentum. So Euro USD also did the same thing, bounced strongly from this area here, kept going up on Friday before erasing the gains, and now we expect the market to be pulling back downwards and getting to retest the previous low. So this could be a key theme for the day as the Euro USD continues suffering against the strong dollar. So as for USD CAD, we saw a very strong rally happening last week. So after we had this breakout towards the lower side, the dollar gained massively on Friday last week. But then after getting to this resistance, notice the area here. Here. The market found resistance at around 1.36 and now is seemingly pulling back downwards. Then in the last 1 hour, we are seeing the evidence of a strong dollar, but then you have to be aware of the strong oil prices. So if oil continues strengthening, we could also be seeing the Canadian dollar strengthening, and the market could be due for a pullback, perhaps even retesting the 1.35224 price level. So gold, on the other hand, has remained completely bearish. We saw this happening last week, a very strong bearish momentum. So this week, the bearish momentum continues, and this is evidence of the strong dollar we're experiencing in the market. So clearly, a nice target would be all the way down at 1805 after seeing this strong momentum happening here. So any form of pullback upwards will be taken as a potential market opportunity to trade the bearish momentum. I remember drawing this last week. So the market was trading sideways. We were monitoring this flag. Market broke towards the lower side, basically triggering short selling positions. Traded sideways for a while, went back, retested the area, and then made some further drop on Friday. And today, being Monday, we are seeing a continuation of the same. So I expect gold prices to remain bearish for the week up until we get to the support level of around 1805. So AUD-USD made a very strong bounce here, went all the way towards the upper trend line. Now it's currently pulling back, and as we continue seeing a much stronger dollar, then this momentum is expected to continue. So if the pattern remains as it has been for the last couple of weeks, so remember this started all the way back in August, where the market is oscillating between the two trend lines. Now we are on a downswing, so I expect the downswing to continue and the market to drop further downwards towards this area here. So US equity indices, we saw the market trading on this channel here. So it was basically a bearish channel. But then on Thursday, the market managed to break towards the upper side. So rallied all the way to the resistance. This is the top of the channel here. Found resistance, dropped back downwards, and is now retesting the area again. So as long as we continue seeing sentiments of higher for longer, then the potential for some further downside remains quite interesting. And there's a good chance we could be seeing the S&P, sorry, the Nasdaq 100 dropped further back downwards towards the previous low that we saw last week here. So it really depends on the price action that we see on this area here, which is a major resistance level. Then for US 500 is the same. So we managed to break, didn't quite get to the top of the pattern. Market pulled back downwards and then up, and now we are monitoring this area here, 4,323. And if it manages to hold, then we keep going downwards. So for the Dow Jones, it was a clean break towards the upper side. Market pulled back downwards and then up. And now we have to monitor this area for another potential bearish momentum. France 40 equity index made quite a strong bounce, rallied, pulling back downwards. And now if you use the smaller time frame, which is the 15-minute chart, then you can identify that this market is currently moving upwards. But there's one key problem. The most recent high, the one that we just experienced this morning, is indicating some form of weakness, a market that is unable to form higher highs. So potentially looking for a break below this trend line might be the idea going forward. So the Euro 50 also made quite a strong rally, got to this resistance, pulled back downwards, and is now playing around this area. So clearly, from a smaller time frame, which is the 15-minute chart, you can also notice the same thing, that the market is attempting to move higher, but then there are some challenges in forming higher highs. So this high is not significantly higher than the previous one, which could indicate some form of weakness in this bullish momentum that we experienced in the last 2 days. So potentially breaking this lower trend line could be the icebreaker for a short selling position. And for the London FTSE 100 index, we are seeing some good rally here on Friday before the market erased gains, attempted to go up, and this resistance area is holding quite well. So observing the price action around this area might actually give you an idea of where to go, and there's a likelihood that this equity index will continue trading further back downwards. So remember, these sessions are always purely educational, not financial advice, and not a recommendation to trade. So always do your own research, analysis, and of course, practice proper risk management at all times. So most surprising thing happening today is the big rally in Bitcoin. So the market opened with a big gap, rallied all the way up, and currently we are looking at $28,400 per Bitcoin after having this extended bearish momentum here. So the market basically pulled back downwards, was unable to form lower lows, eventually broke towards the upper side, and we haven't seen such high prices in a while. So the last time we saw Bitcoin trading at this area was on the 17th of August earlier this month. So I'm checking in to see if there's any questions. So hi, Eric, Richie, and Dennis. How do you do, RK? I'm doing fine. Oil prices rose sharply in September, recording their 4th consecutive month of increases. Brent posted a handsome monthly performance of 7%. If you juxtapose this to inflation rate, I think the high rising oil prices are as a result of the demand and supply powers or forces, where on one side the global economy is attempting to make recovery. We have a very strong US economy. Europe is improving now, and as a result of that, we are seeing higher demand for oil. But then on the supply side, the OPEC countries are not increasing supply. The US has almost completely drained its SPR reserves, and in this case, supply is limited, leading to much higher prices. But then when oil prices move higher, they have a direct impact on consumer prices, where in this case, you expect consumer prices to be rising. So we have seen this in Kenya over and over again. Whenever oil prices move higher, then the general prices of goods and services tend to go up, and this leads to a much higher inflation. So the inflation is becoming a problem, having taken a U-turn in the US. We also saw it take a U-turn in Canada, where it's now on the rise, and we could be seeing the same trend apply to the Eurozone. So seeing inflation on the rise would mean that the central banks will have to hold interest rates higher for a longer duration of time, and this basically means stronger currencies. But then when you look at the flow of money from different economies, the economy that is most stable with the strongest currency and the highest interest rates on their bonds will have much higher demand for their currency. And this may explain the 11-week rally on the dollar index. Is there a likelihood to have higher inflation reports this month? Yes, there have been a very strong bullish momentum on oil, and this is expected to have a reflection on what's currently happening with inflation reports. So hello, Irene. Hello, Nicholas and Joe. Lemuel. Yeah, apologies. I wasn't sharing the calendar yet. Then, hello, Rufus. What are your thoughts on ICT concepts? I never hear you mentioning them in your sessions. Would you recommend them for someone interested in swing trading and intraday trading? So when you think about it, about ICT concepts, it's a more recent strategy that has been developed recently. But then, if you've been in the markets for longer, if you ever speak with any trader who has been in the markets for the last 10 years plus, they will basically tell you the same thing. So every couple of months or years, we normally have these new generation of traders who come and repackage old concepts into newer concepts, but still telling you the same thing. So once you understand your charts correctly, the book patterns, reversal, continuation patterns, you study the relationship between price and volume. Then you study your support resistance, your trend lines. The same concepts will be repackaged into some funny terms and then presented to you in the same way. But then it's always the same thing. We are always trading the market psychology, and it always tends to play around support resistance levels, which represent the optimum points to make a market entry. So even if you study market concepts, I would say you start from the basics. Go back in time, look at how all this originated, look at the importance of support and resistance levels versus the psychology in the markets. Once you understand those concepts, anyone presenting you with ICT concepts will basically not be adding any valuable information to your trading strategy because you'll know exactly what you're looking at. Which assets are you mostly bullish and which ones are you mostly bearish? Most bullish is obviously USD JPY. Clearly, there's a huge divergence between the two central banks, so it makes it a very simple trade. You expect the USDN to continue rallying upwards. I'm also very bullish on oil. I expect oil prices to be moving higher. On bearishness, I would say the overcooked Nasdaq. Nasdaq has been pretty strong for the better part of the year, but then it's not all the companies in the Nasdaq or the S&P 500 that have been making profits. It's only a small number. We basically call it the Magnificent Seven. So without the Magnificent Seven, all the other stocks are basically moving sideways. And with higher interest rates and the US consumer hurting from higher interest rates, at some point we should be seeing these equities start going downwards. So the main reason, and I mentioned this earlier, is that the investors who made bumper profits from these investments are basically locking in their profits by selling and then locking the money in treasuries, which currently have very high yields that are guaranteed to make sure they have bumper earnings at the end of the year. So if you are an investment manager, you bought a couple of stocks or indices or whatever equities at the beginning of the year, you are up 30, 40, 50%. You don't own a risk. There's an increased risk that the bullish market may not continue for longer, especially with Jerome Powell basically mentioning that interest rates could stay higher for longer. So with this happening, it basically means that there's a lot of investors who do not believe that the equity market rally will continue. And with this kind of psychology happening to spread across board, I believe we have already seen the highest of the year for the S&P 500, the Nasdaq, as well as for the Dow Jones. So I expect bearish momentum going forward. However, do your own research and always use proper risk management. So Why is the Swiss franc very weak of late? Of course, there is a high inflation, and their interest rates do not match up with the interest rates we are seeing in the US. So with interest rates at around, I think it's 1.75% in Switzerland, it means that you can borrow capital cheaply in Switzerland and then invest that money in the US bonds and get a risk-free return. Well, yes, there's risks in bonds, but then you'd get a significantly low risk investment by simply borrowing money from Switzerland, selling CHF for the dollar, and then using the dollars to buy US bonds. So that's what has been happening, meaning that the dollar is currently pretty strong against the Swiss franc as a result of this current trade. So thank you very much, guys. Thank you for your time. I really appreciate this. And I hope to see you on the next session, which will be happening tomorrow at exactly 11 a.m. as we cover the new market developments and try to understand the key market trends for the week. And these will help us identify trading opportunities. So thank you, guys. See you on the next session.